we know that over the last 10 years, QQQ, the ETF that tracks the Nasdaq 100, has grown really a lot. But the real question is, what can we expect from the next 10 years? I'm Giacomo, founder of Awalyt, a portfolio analysis platform built to help investors make decisions based on data and not opinions. If you want to analyze your own portfolios, check the link in the description. And now, let's get into it. To give you some numbers, $10,000 invested in QQQ in 2016 would have given you around $70,000 today, which is 7 times more. Consider that the same investment in the S&P 500 would have given you around $40,000 today. If we look at the numbers calculated by Awalyt, we can see that the ETF had a volatility of around 22% per year and a worst drop down of 35%. It also had a correlation with the S&P 500 of almost 0.93. So that means the two ETFs moved almost together. But the interesting part is to understand why this happened. In case you don't know, 50% of the fund is tech sector, and the first 10 companies out of 100 make around half of the fund. So the concentration is very high. By the way, I have done an Excel with a full breakdown of companies and sector. If you want to download it, the link is in the description. Because of this concentration in tech, in 2022, the index suffered really a lot. Consider that the interest rates went up, and when rates go up, usually tech companies get hit more than the others. So the result was a big drop, and the fund lost almost 33% in a single year. And here we go to the initial question. How will this index do over the next 10 years? It's not easy to predict, and usually nobody has a certain answer. But according to sources like Vanguard and Fidelity, in their 2026 outlooks, there are 3 things to watch. The first is concentration, because as we have seen before, this index is more and more concentrated in a few companies. And these companies today have very high valuations. So if even some of them do worse than expected, the whole index will suffer. The second is the AI sector. A big part of the recent growth depends on expectations around artificial intelligence. So, as long as these expectations are met, the index goes well. But if they slow down, it will affect it. The third is interest rates, because in the short term, they could go down, and this is good for the tech companies. But a lot will depend also on inflation. And in 2022, we saw how much rates can impact this index. In the end, I would like to give you also my personal opinion. I think it will be hard to have the same good results also in the next 10 years. And we should be careful of the high volatility due to the high concentration in tech sector. I'm not saying that it's a good or a bad investment. I'm saying that it's important to understand what you're buying and whether it fits the kind of investor you are. If this video was useful, subscribe to the channel and let me know what you think in a comment. Thanks for watching and see you in the next one.